All right, hi guys. My name is Alexandros. I'm a student in Leon's course. Uh, some of you guys you've spoken to. Anyway, reason for this video that I'm doing because I have got a few private messages. Uh, I've seen one of your main concerns is a lot of information that you need to absorb, which is why I'm sort of just trying to break some things down for you, and which is literally not needed to try and gather information that is will have actually no value to it. So I'm just going to give some brief explanations on why and what and how. Um, but before we start going into the story about what information, how, and what and what's considered important, I'm just going to break some certain rotations down. One thing um, I am going to talk about is just from a wider perspective, and so you can come to a bit of understanding as to why certain information is looked at and for what reason. And this is what Leon says in the group many times, and something you need to pay attention to. And one of the first things before I do start getting to this topic is you, you really literally have to do the course. You literally have to do the course. Do the course and even do it and understand it. Understand the why. This is the key. This is something that I find very, very interesting about Leon's course and why I think it's the foundation to everything. Because, and as Leon says, all roads lead to rates. And it's exactly that. And that's what course is basically mainly about. And that's why I call it the foundation. So once you've, which I'm pretty sure most of you guys have done the course, um, jump in, do the course. I think Leon's also changed the password on from what I understood. Um, jump in, do the course, understand what the difference is. Um, why does it change the way it changes, and the reasons why we have to look at the Fed. Um, now, let's say we do understand that, we have a quite understanding of why rates move the way they move, why inflation, how it affects the Fed's decisions, and so on. How do we take that to advantage, and what we're reading? How come it's not adapting the way it's adapting? Well, one of the main concern is that you have to look at the participants in the game and for what reasons. Now, I work in a trading firm. Um, I'm just going to give you a quick example. Um, I deal in the bond market. Dealing in the bond market, I could have a client coming to me saying, "I have a pit he as he has his pension funds, and he wants to transfer all those pension funds from the 30-year to the 10-year due to the divergence in the yield." Now, this type of participant looks to transfer. He would need buyers on the 30-year to sell, and he would need sellers to buy on the 10-year. So it takes a bit of time. That's when the traders on the trading floor end up looking for liquidity and continue the transactions. These type of traders are more known for. Others call them liquidity hunters. Others call them absorbers. Um, but just remember that they have it to this. They sit in there in that position for a certain reason. They sit there to transfer a large amount of contracts from one contract to the other. They look for someone on the other side of the trade. They don't care who it is. They have a certain time to do it or a certain range to do it, depending on what the client was asked for. Um, and then we also have um, traders which sort of look at it as a much more Um, as an interest, like a dividend, this type of trade is sort of um, an example would be Goldman Sachs when he has a large clientele saying we need to buy the S&P. These guys in a certain amount of time or a certain amount of range again look for clients that look for dividends and so on. Another example, which is more like into our category, are directional movers. We look for direction. We don't sit there waiting for someone so we can fulfill our contracts. We don't have that many large contracts to trade. So we basically look for direction, and as we look for direction, um, we come to certain understandings and certain and according to what we've observed in our analysis, we react and we respond. Um, but the main point is that all these participants have one thing in common. Every single one, every single trader that wants to participate seriously and look in this and looks at this as something um, into the future, they always look at one thing, and that one thing is interest rates, inflation, Fed decisions, unemployment. These are the three main things that everyone looks at, especially interest rates. There's no reason why that they would have anything else in particular, because everyone else has their own strategies, their own technical, their own tools, the way they trade, what they look at. Scalpers will look at more into order flow. They'll be looking at the ladder. Um, Even those guys look at rates. They know what to expect. They know where to respond, and they know when a certain position is being placed or triggered. Um, they know how to execute due to rates. They know what to expect. So just remember that we have so many participants and they all look at that one thing in common, which is where we come back to the foundation of Leon's course, which is why learn what the market looks at. This is the main topic. Everything else is just technically driven, um, and it can just react and respond according to what market sentiment is. This is a human behavior reaction upon everyone. Not everyone does agree, so we do have uncertainties and we do have mixed feelings. I did place something inside the group. I don't know why it turned out the way I did. I couldn't get this in one shot as a screenshot, so I've made this for you guys. Basically explains the basic concepts, what, when, and why under certain positional reasons, and what fundamental drivers can react. So you everything this is a guide on what you hear out on the news and so on, keywords. You can always come back to this chart. I'm going to send this to Leon, and Leon will put this in the group for you. The way I posted it, I don't like it. I just sorry, I'm not a computer guy. So um, I'm pretty sure Leon be able to fix it if I send this to him. So going back to where we are saying and why Leon's put so much effort into this, where you could sort of say, okay, we understand rates now and we understand inflation, and I'm gonna get to an example and how we could sort of slightly break it down and not overfill your mind with things that you don't need. Um, One of the most important things is to look at is what's been said in a certain period of time. I am going to use an example. Um, let's use, okay, I normally trade with Sierra charts, but this is my, I'm going to work with my trading view charts, which so you guys can come to understanding. All right, let's go to Euro USD. Something more understandable to everyone. Okay, up until now, what do we all know? We all know that the Trump administration wants to raise taxes to all imports. So this has been the strongest talk and the strongest flow, market flow up until now. And Um, and obviously, from what we read, even if we don't know, we just hear this on the news. Well, we can always. This is why I love Leon's. Um, you can go straight here. What's happened in the US? Let's say we want to trade the euro USD, and what's happened in the US? You can come back. You could sort of see what and how. Everyone's main concern. Okay, let's go to MP. This is one of my when I first started out. This was my everyday tool. So this is a tool where you guys can check out and see. I've always loved you. Leon knows this. I was a big fan of MUFG. This is what gave me great ideas and the way they thought prices. To me, they're not politically driven, so which is why I trust it. Um, so there's the talk. Trump. It's everywhere. It's something that we spoke about a couple of weeks ago. It's something that we all should keep aware. Lawrence has posted this quite a few times. Spencer's mentioned it quite a few times. So the guys in the group will keep you aware. If something new important comes out, they will post it. Especially Lawrence. Lawrence will go out of his way and sort of say, "This is something that you should look into." So you can see you see what the two main biggest events are for this week. You can see it's the Trump administration coming into office, and we all know what his purposes are, what he wants to do, and what impact that has on the market. See, these are certain things that we look at because we know what impacts um, we could have due to the rates, and this will impact. This has a possibility that it might impact the rate, and the Fed might need to hold rates for longer due to what Trump's administration is ready to take action upon, and that's raising taxations for imports into the US. So, use how can we take this advantage over this as we're looking first? How can we verify this? Our rates are green. Is the Fed the ones that actually do control the rates? Is the Fed agreeing to what's happened to everything? And what have they mentioned up this? And what are the markets saying this? So we also have Bloomberg saying, please go read it. I don't want to read this here for you, right, you guys. Looking back, you could also see again, if we get into deeper, here it is. This is a period. This is what I want you to pay attention to. Okay. Now, this is where our we can understand the divergence and what we're looking at as what we've got here in the group versus what's the market really priced in. And we're going to look at it on both ends. We are going to look at on the CME and the euro. Okay, hold on. Why is this? Well, I think I have to re-enter again. Sorry, just give me a minute, guys. Okay. Well, we could obviously see what the market has priced in. So we could see that we could already see the divergence. All right. Um, remember what ING is saying, three cuts. That's one thing. This is what's being pushed out towards the public. Bloomberg up until now were disagreeing, but lately they're coming back into that towards that direction as well. Um, no, I don't trust Kathy Lane. Okay, now this is projections. If you want to get this is one. This is the Federal Reserve's right. This is what they've actually mentioned on their projections. You can go a lot more deeper into it. I'm just going to keep it simple as to know where your guide, sort of guide towards what is the Fed saying. Is the Fed saying what the public is saying? Is the Fed saying what the market is pricing in? These are all divergences. These are all things at some point a correction will happen. What is a correction? Reality. See, reality is sort of gonna come point. They're all gonna come in and combine at some point. So as we before we approach reality, what information do we have? And all the information is the 2025 projections is from roughly from 4 to 3 point. basically 75 basis point a 50 basis point cut towards a 75 basis point cut. So basically, up until now, um, we have someone's mentioning ING's mentioning might three rate cuts, which probably the closest. The market said one. So basically, the market, we have an opportunity here that the market might be wrong. We don't know this up until now. And what's holding the market back? If you go through some of these calls, through some of these, and Leon does mention these in his call groups, and he keeps on saying it, you could sort of see um, we might be wrong about the Trump administration. He might come out with something that, again, I mentioned that our friend Lawrence has mentioned it, as we could see here. Pay attention to what certain people put inside the group. Lawrence is one of them. There you go. This is just basically telling us that Trump had great is ready to sort of trying to find some form of deal with China. This does is a positive for the global market, at least coming towards the rumor side. They may not remember what how Trump first started out, very aggressive. Now he's sort of backing up. This is an opportunity where the market might see we might start seeing more participants. Remember, human behavior responding and changing direction. Again, what's the ECB saying in their projections? Oh yeah, Leon, I got a. This is something I want to share with the group. The ECB does have their um rate, like the CME has. The Fed Watch Two, the ECB Watch Tool. So this is from the actual ECB site, European Central Bank. Okay, I'm going to share this link with Leon. I haven't seen you guys posting it, so it starts from 3 months ago. These guys work on a 3 month basis, but on an everyday change. The good thing is that you could choose the days you want to. Let's just see what they've done on the past days that we've wanted to see. Okay, yields. You can see the yield change and their projections. 1 year. Remember, the ECB said 2% by the end of the year, by the end of 2025. The overnight fund rates have pressured 2.3, something higher. Short term, it's lower. You can sort of see the changing is a lower change short term. Short term, they are looking towards that direction, a 2.5% versus 2.3%. So this looking at overall into this, the ECB might have slight. So we do have an under the euro is slightly it's undervalued compared to what the rates are telling us. So um, this is where we could sort of take it. I'm not saying we're going to go out and buy the euro now. We do need to come on to technicals. This is where our technical driven market can help us out. Fundamentally, what we're seeing, what's being priced in, what's being said, remember, behind every buyer, we need a seller. Each contract, we have an offer contract, we have a bid contract. I don't want to get too deep into that because I don't want to confuse you. Um, but on basic terms, this is what market pricing versus market gossip, okay, which some gossip is, some isn't. Um, this is one of the reasons why I do see MUFG as a more of a trustworthy source. Leon does post a lot of MUFG. He's also a fan, as I'm a fan. Um, and different sources, ING and Leon puts him in there. The information's in there. You don't need to go running elsewhere looking for it. It's there. So it's there for you to be provided. Just by absorbing this information, how do we set and how do we trade? This is see now this is where market this is what we need now. Up until the information we have is that it's just basically simple that we're waiting for the Trump. Okay. Let's say I'm waiting to get into a trade and what direction shall I take? Well, this is where is the market uncertain right now? Basic come to say, do I jump in the trade now? Do I see something that I understand? If I'm not understanding the trade right now, I just do not enter. Simple as that. I just wait. A lot of the guys in the on the in the trading firm, that's one of our every time we enter a trade, we have to give a reason and make this a habit. Record your trades, um, do little recordings, and according to what you record, you understand, observe on what you have done, why you entered, reason you entered, and go back and check it, double check it, retest it. This is will build your self awareness and understand where you, if you're making mistakes, or is it a trade that you something you didn't look at, and go back. If I pass 4 or 5 trades where something went wrong, I just stop automatically and start doing my research and saying, this is something I thought I understood. I should have not entered it because of the reasons that I found. Reason, planning, and reason. So before I've even entered into this trade, must already been little. I must be self-aware on what I'm doing. Am I understanding on what's happening here, or am I guessing? So come and ask yourself these questions. Okay. If you're realizing that you're guessing, that's something good. Even if you're understanding it, you know the reason why you're entering, at least that you're guessing. You're willing to take on a gamble. That's much to my respect. You're accepting on what you're seeing. You're understanding. I'm gambling the result. So according to my gamble, I'm going to do this. Or I am understanding this trade because I'm having these reasons, either technical or fundamental. And right now, on what we're seeing, fundamentally, we know what we're waiting for on what this little information that we've just seen. Okay, so it's the Trump. We know that the ECB long term has the ECB fund overnight fund rate accounts contracts are looking into a higher euro compared to the dollar. Um, but that's long term. Short term, so if I'm a long term trader, if I want to get into a position, I could probably be positioning right now. I also look at options, see what changes have been made into the longer term and future contracts. This I don't want to confuse you there. So that's why personally, me, if I have to fulfill positions, now will start being a good time. Slowly, start filling in positions. Because why? There is a lot of selling. There are a lot of people selling the euro dollar right now, and it's an opportunity, and you can sort of see that over here. I see that here in this bulk over here. There are a lot more participants being more active around here. So this is also signaling to me personally, and it's starting to die down as well. The participants, as we're looking at volume here. So personally, I'll be getting ready. If I'm looking as a long-term trader, um, as a short-term trader, like if we're looking for something to sort of buy the dollar, um, we could always, if we're not already in the position or we want to prepare self positions, Leon explains that in the technicals course. But the whole basic thing is for you guys to understand that you don't have to go running around everywhere with just 2 3 basic concepts. Sit down, read it. You can come to understanding um, on how you could approach the markets. You don't have to go reading everything. Just look at what the market is saying. Look at what the Fed is saying. Look at what the ECB is saying. I'm just referring to Euro USD. You can go to the RBA. You can go to um, uh, um, um, the Bank of England, uh, Bank of Japan. They have their sources. You can see that, recheck it. Are they agreeing? Is there a divergence or not? Um, um, i- and from there, you can sort of take advantage of that gap, of that spread. That's where you can start and saying, okay, this is my plan. If I see technically it's overreacted, which right now the euro dollar is slightly has the dollar has been oversold for the short term, but also on the RSI, we're seeing the euro being oversold. So there's 2 different aspects we could sort of look at it at. This is why the mixed market comes in. We are sort of got entering a mixed phase. So even if Trump comes in very positive to China, we are going to get a very much mixed sentiment. but also an advantage, and what to look at forward, you can sort of judge upon your own, um, um, from what the fundamentals are telling us. Okay, guys. Um, that's all I can say on the basics on what sort of how to sort of guide you guys, um, without running around everywhere. Take care, guys.